Well, the past week has seen fresh record highs for US markets, but Australian markets have been reluctant to join in with the maximum gains. So hi there everyone, welcome to the Traders Circle Weekly Market Update. It's already the 28th of October 2025. And before I start, you do need to be aware that whatever I say is general advice only. The big news over the past sort of week or so is the US inflation reading that came out on Friday night US time, or Friday night Australian time, I should say, and that saw US markets close strongly higher. That's because US inflation came in slightly lower than expected, basically in line with the previous quarter, and sitting pretty stable at 3%. Now, given that lower inflation number, US investors were pretty happy to price in further interest rate cuts, and that sent their US markets higher. Now, after that, our market didn't really take the leads from the US. We really didn't join in with the absolutely strong gains that we saw. US markets up over 1% on Friday, up over 1% again overnight, and our market has been sideways to lower during that time. It could be that we're waiting for our own inflation reading, and that's also going to come out this week. It's going to come out tomorrow about 11:30 a.m. Australian Eastern Daylight Savings Time. Our inflation is also expected to come in around 3%, and if that's the case, it's a little hard to know what the response from our market will be. I would suggest that anything in line with expectations, I don't think there'll be much of a response. Anything above expectations, we could see some selling, and obviously anything below expectations, we could see some buying as the market prices in rate cuts. But so far we've had, the US inflation lower than expected. That sent their markets higher, and then perhaps our market waiting for tomorrow's inflation data to decide whether or not they're going to price in further RBA rate cuts. Our market has been a little bit slower to price in further rate cuts, and that was at least until the most recent Australian unemployment reading. And that unemployment was a lot worse than expected. I've mentioned it in the past few videos. I think the RBA missed the mark with that unemployment reading. But regardless, if the inflation tomorrow is stronger than expected, it's still going to mean that the RBA will keep rates on hold. Interestingly enough, RBA Governor Michelle Bullock actually spoke last night, and she talked about if there is a potential, I would say, crash in asset prices, but if the asset price bubble pops, that could be the catalyst for further interest rate cuts. And what that really says to me is that they're actually looking at risk asset prices, and that they're taking risk asset price inflation into account, not just consumer price inflation. And to me, that says, we've got risk asset prices at record highs. Maybe that's another reason that the RBA is using to hold off cutting rates further. They don't want to inflate house prices too much further. They don't want to inflate the stock market further. They don't want to inflate other risk asset prices. So they're not just considering consumer prices, they're also considering risk asset price inflation. So I sort of just wanted to flip what she said on her head a little bit. The RBA isn't just looking at consumer prices, they're also looking at risk asset prices. And given how strong house prices are, how strong the share market is, that means that the RBA is less likely to cut rates with those prices so high. Now, obviously, if CPI is lower tomorrow, that boosts the chance of a rate cut from the RBA. I think it's going to need to be a lot lower than expected for the RBA to cut at their meeting next week. But if it is lower than expected, it does open the door for a rate cut, if not next week, then at their meeting in December. We've also got a Federal Reserve meeting in the US this week, and the Federal Reserve is expected to cut rates again at this meeting tomorrow night. That's despite, obviously the inflation was slightly lower than expected on Friday, but it's still well above the Federal Reserve's target range, and it isn't really coming down. The Federal Reserve has a target range of 2% for inflation, and their inflation is 3%, and it's really been sticking around 3% for the past three months now or so. So it is a little bit interesting that the market has been factoring in those rate cuts. I think it comes after some political pressure, and it also comes with the US economy outside of a handful of large AI stocks who are regurgitating funding between each other. The US economy is in a pretty terrible shape. outside of a handful of large AI capex businesses, basically. So yeah, the Federal Reserve will cut, and especially after the recent inflation reading, they will cut tomorrow night. That is bullish for markets. Instead, markets will now look forward to see if they're going to signal another rate cut this year. I really don't think they should. I don't think there's any sign that US inflation is continuing to fall. Obviously, the reading came in slightly lower than expected on Friday, but it wasn't really a drop down from the previous months. They were expecting a slight gain, and pretty much it's been in line for the past few months. So yeah, I don't think there's any real sort of justification to cut because prices are still growing rapidly. And the risk is that they continue or they grow further if they do continue to cut interest rates. So yeah, I think they have more cause to pause over there than we do here in Australia at the very least, although maybe I'll be changing my tune if our inflation is stronger in tomorrow's report. Interesting that they did report the inflation numbers in the US. Otherwise, no US economic data is currently being reported because the government shutdown is still ongoing. So it's entering, I think, day 24. It's the second longest in history at this point, I believe. Possibly a fair chance, I would say, it becomes the longest in history. We haven't seen any other US economic data due to the shutdown, but Friday's inflation report was so important that they dragged those workers back to their desks, unpaid, I might add, to get those numbers out. Finally, I wanted to touch on earnings. We're in the middle of a US company earnings reporting season. It's actually going pretty well, better than expected, I should say, although all their earnings seasons go better than expected. It is the game's kind of rigged over there, I should say, so that the companies beat their expectations. It is kind of funny, but that's the way it is. The thing is, though, that the important reports are yet to come out, and those are the reports from the AI companies. I'll bring up a chart next week. I'll sort of illustrate it, but the US economy is kind of going down the toilet outside of AI capex expenditure. It is basically the entirety of US economic growth at the moment is coming from AI capex expenditure, and if that doesn't start translating to profits for those companies spending that capex, then we could see a massive revaluation of the market. It is a bubble that global markets are in. Obviously there's plenty of voices saying, well, it's not a bubble, blah blah blah. The thing is that if not bubble, why bubble shaped? And it will eventually see a normalization of valuations, and that'll be the bubble popping, and that does mean a large amount of room to the downside. I'm not necessarily saying that because I think it's going to happen anytime soon. In fact, I don't see it happening before February 2026, maybe even quite a bit after that, but it will happen at some point. The other thing that I think is approaching bubble territory is bank valuations, the Australian bank stocks, and they're also about to enter earnings reporting season as well. So we've got ANZ, NAB and Westpac reporting from next week onwards, and those reports are going to have to be pretty good for the sector to hold the current levels or advance even. Currently, those bank stocks are trading at about 50% premium to their historical averages, and now that is probably a little bit less if you look at the forward earnings, but even so, at a huge excessive valuation, even compared to the rest of the Australian market. It comes after some positive trading updates in August for the quarterlies, but when we see the full reports from next week onwards, I do think there's a bit of a risk we see some revaluation in the sector, and given that it's the only thing really holding our market up here, it could be a huge revaluation for the Australian market as well. So let's have a look at the charts for this week then. We'll start with the US market just because usually it screws up my iris trying to load it, and we can see that they broke higher, strongly higher on Friday with that lower than expected inflation reading. They continued higher overnight with that momentum, with that breakout, but also they jumped higher because of a bit of optimism with Trump meeting with Chinese President Xi Jinping, and he announced that he's expecting to sign a trade deal at that meeting. Now, I suspect they're not actually going to sign a trade deal. It's probably going to be more like a minor agreement, but Trump will herald it as a deal, as he always does, and that's probably going to be enough for markets. At least for now, the markets are willing to take Trump at his word, when in reality, the trade deal probably won't be finalized at their meeting. Regardless, though, they have strong bullish momentum. They jumped higher on Friday. And with the inflation data, and then jumped higher again overnight with the trade optimism. That indicates further gains. I'm not sure where to, impossible to say when you're rising into blue sky territory, but look for round numbers. Could be 6,900, it could be all the way up at 7,000, who knows, we'll have to wait to see. If they do see some selling, we're looking at the previous resistance as the potential downside target, as the potential support level. That would be 6750. And then if that breaks, they've also got an uptrend line not too far away. So overall, US markets continue to look extremely bullish. It's a little bit of a different story if you look at the Australian market though, and this is the Australian XJO index. Now, we reached our own all-time high midway through last week, or sort of early last week, I think it was, and that was 9100 or 9110. Roughly, we held that as resistance, and then we came back down and we tested the 9,000 support level. Sort of ground along that level, and then we tried to pop higher yesterday with the break higher in the US on Friday night, but we weren't able to do so, and then we've come back down today, back towards the 9,000 level. So we're testing that support at 9,000 again, and that's despite a couple of really strong jumps higher in US markets. I think part of that is, believe it or not, Michelle Bullock's comments last night about the RBA and about how they're looking at asset prices, and then maybe also a bit of nervousness going into our own inflation report tomorrow. Technically, for our market, I've drawn this potential uptrend line, so it is one to watch. It goes back, up from our lows in April of the year. We touch at the sort of lows at the end of September, and then the most recent troughs since then. I would be keeping an eye on that, and we're not too far away from that level. So if we do see a bounce in the coming sessions, that could indicate that we're holding that trend, and that we're inside an ascending triangle, and potentially about to retest 9110. If we break below that level and break below the 9,000 support, however, that would indicate a move back to that 8880 level, the previous trough, and that was our resistance for September as well. So our market, perhaps a little bit more negative than the US markets. They've had a lot of optimism with the lower than expected inflation reading, the expected interest rate cut tomorrow night, and with Trump basically signaling that he's close to a deal with China. Our market a little more uncertain, with Michelle Bullock, the RBA governor, basically saying they're worried about asset prices, and with our own inflation reading still to come tomorrow morning. So we'll wrap it up there for this week, guys. Hopefully you guys enjoyed. If you did, click like, click subscribe, and we'll see you in the next one.